Hello and welcome to the Business Standard Morning Show. I am Ruchika Chitravanshi. It is 12th of June 2023 and here are the top stories for the day. Is Foxconn-Vedanta split a setback for India's chip dreams? Why has Trai changed its stance on OTT regulations? Will sectoral laggards of H1CY23 regain mojo in H2? And what is the Indus Water Treaty? Taiwan's Foxconn has pulled out of its pact with Vedanta to build India's first semiconductor plant in Gujarat. The deal, which was announced about 10 months ago, was on shaky ground as both the firms had no chip-making experience, and the joint venture was struggling to find a technology partner. So what does it mean for India's ambitious chip-making plans? Bhashwar Kumar does a reality check.
It's a bad idea to bet against India. That is what Minister of State for Electronics and IT, Rajiv Chandrasekhar, tweeted in response to concerns that Foxconn's decision to pull out of the Vedanta chip-making joint venture was a blow to India's semiconductor fabrication ambitions. Chandrasekhar said Foxconn's decision would have no impact on India's goal, and it meant that both companies would pursue their India strategies independently. He cited failure to source a technology partner as the cause for the split. But the opposition had a different take. Bad news for India's chip-making plans. That is what Congress leader and former Union Minister Milind Deora tweeted. Congress General Secretary Jairam Ramesh also criticized the government and raised questions over outcomes of MOUs and global investor summits. On July 10th, Taiwanese major Foxconn walked out of its joint venture with the Anil Agarwal-led Vedanta Group to set up a 1.54 trillion rupee facility in Gujarat. After an MOU was signed with the Gujarat government in 2022, earlier this year, the JV had announced that a semiconductor and display manufacturing facility would be set up in the Dholera Special Investment Region. Before Gujarat, Maharashtra was explored as a destination for the plant. For its part, the Vedanta Group said it had lined up other partners to set up the foundry. It added that Vedanta had a license for 40 nanometer chips from a device manufacturer, and it would shortly acquire a license for 28 nanometer ones too. Meanwhile, after parting ways with Vedanta, Foxconn reportedly said it plans to apply for incentives under the centre's semiconductor manufacturing policy, adding that it was working to submit an application. This split has been seen as a setback in some quarters, as the Foxconn-Vedanta JV was one of the first 3 players to apply in January 2022 to be eligible under the centre's semiconductor scheme. It was offered 50% of the project cost upfront and was meant to make 28 nanometer chips. But back and forth on technology negotiations reportedly put things on hold. Also, none of the 3 projects under the semiconductor scheme has received clearance from the India Semiconductor Mission. Both Singapore-based IGSS and Dubai-based ISMC, which had a tie-up with Tower Corporation for a 24,730 crore rupee technology project, have been asked to give fresh proposals. On June 1st, the centre reopened the window for applying to its 76,000 crore rupee semiconductor plan, after these 3 applicants ran into hurdles. After the first 45-day January 2022 window, the new one will be open until December 2024 and is meant for both new and existing applicants. There has been good news too. India has been able to rope in Micron, which has agreed to invest about 2,350 crore rupees in a chip testing and packaging plant. However, while the wafers will be imported to the testing plant, Business Standard has reported that talks have also commenced on the possibility of Micron setting up a fab plant for memory chips. Keeping all these developments in mind, is the Foxconn-Vedanta split a setback for India's overall semiconductor manufacturing ambitions?
It's not a setback, and I would also say that it's not even a stumble. As you rightly said, it's more of a readjustment. It was clear that both the partners, Foxconn or Vedanta, they didn't truly have a technology partner. So they would have taken that much more time. And now what the two parties are saying, we'll find our own independent technology partner, and that may be good for the country. That we'll have, instead of one proposal, there'll be two proposals. The Micron proposal being approved by the cabinet is a bigger news, in my opinion, simply because we have to recognize one important fact. Let's say if the fab came first and the wafer was produced, what will happen to the wafer? It has to be packaged. And nobody would set a fab here and packaged elsewhere and then sold internationally. So it is very important that the packaging units come here first. And Micron has taken the lead. That will also set a pace or give indication to the domestic players also to get into it. So packaging, in my opinion, going ahead of the foundry or the fab projects is a very good development, in my opinion.
I think one company not being able to find a partner or not being able to be aligned in their way of doing things is quite a normal thing to happen. So I don't think, I would still look at the big picture very much intact. And I don't think it's so much policy because quite frankly, the government has really, gone beyond what we had imagined, because it's not only a payment of 50% by the central government, largely in terms of incentives, subsidies, whatever you call it, but also that it's pari passu. Now, that's a big thing, and that makes it very practical, and we are very happy that the government, in fact, I think the Honorable Prime Minister himself announced that. And then state governments are backing it up with almost a 20% additional thing. So from an incentives perspective, I think, no, I would not sort of advocate that anything more is required. Obviously, but I can imagine from the semiconductor business companies making this large an investment, they want to be assured of the markets. And they are still wondering whether they will be able to make it here competitively. And is there a large enough market? And if so, for which type this thing? So it's a business case. And I think just let us give these companies some more time. They are all, I'm sure, looking at this very seriously.
Industry experts still appear bullish, especially due to the September 2022 modifications that made the semiconductor and display manufacturing policy more competitive thanks to the cabinet revising incentives across the spectrum. However, they caution that steps in the semiconductor ladder, going from packaging to fabs, may have to be followed.
A broken deal should not chip away at India's ambition to become a global semiconductor player. Meanwhile, an about turn by the country's telecom regulator has taken many by surprise. Last week, the Telecom Regulatory Authority of India came out with a consultation paper seeking suggestions on regulating over-the-top players like WhatsApp and Telegram. It comes 3 years after the regulator had spoken against creating such a regulatory framework. So why has Trai changed its stance on OTT regulations? Debarghya Sanyal dials experts for answers.
Almost 3 years after it first recommended against creating a regulatory framework for over-the-top or OTT communication services like WhatsApp, Zoom, and Google Meet, the Telecom Regulatory Authority of India is revisiting its stance and starting consultations on how these services can be regulated. In a consultation paper released on June 7, the TRAI has asked stakeholders to send suggestions about regulating services and whether a selective banning of OTT services can be done as opposed to shutting down the entire internet. Regulating such services has been a long-standing demand of telecom operators, who have been advocating for same service, same rules. TRAI has sought written comments from stakeholders by August 4th and counter comments by August 18th. The latest development comes after the Department of Telecommunications requested TRAI to reconsider its September 14, 2020 recommendations on a regulatory framework for OTT communication services in a letter dated September 7, 2022. The development signals the intersectionality in regulations around internet services, with multiple government agencies claiming a stake in the sector. The draft telecom bill released by the DoT last year also recommended bringing OTT services under its ambit by creating a licensing regime for them.
Trai had no option, I think, because the DoT has been facing pressure from the telcos, the 3 or 4 major mobile players. They believe that their regulatory terms are more burdensome than the OTT players, who they believe, and I disagree, but they believe are offering competing services to theirs. And they want, therefore, the regulatory burdens to be comparable. So that is the pressure on the DoT, and DoT has again flagged this point to the TRAI. The TRAI is duty-bound to respond to a reference from the DoT.
The prime cause of concern arising from the consultation paper is the inclusion of selective banning of OTT services. Since a complete shutdown of telecommunications or the internet can have significant ramifications on the country's economy, TRAI is now exploring selective banning OTT apps, a recommendation that was first made by the Parliamentary Standing Committee on IT.
Whatever is happening over here, it would be a violation of net neutrality. The attempt here seems to be to consider creating a situation where instead of banning the entire internet, they would ban selective apps. And this has come because India has a checkered past with internet shutdowns, over 100 internet shutdowns in a year. Now, this is a problem because what happens when you ban an app is effectively you are banning all speech, including legitimate speech. The same problem that is there within an internet shutdown also lies with that.
And I think the very fact that banning of certain services appears in the title of this consultation paper should worry us. And banning is not typically a regulatory kind of a focus generally. Having said that, I think it is what I read in the consultation paper is the treatment of security and licensing in the same breath. It has always been my view that licensing and security are quite different. Security is a major issue, and particularly in these days. And threats due to security threats from communications are a reality. But I think we cannot afford to treat this serious problem in terms of licensing or not licensing.
This is not the only cause of worry. Also noteworthy is the inclusion of new age over-the-top communication services like WhatsApp, Signal, and Telegram in the definition of telecommunication services in the draft telecom bill. The TRAI has argued that while telecom operators and OTT platforms such as WhatsApp offer similar services, they are not bound by the same requirements. As a result, there is a need for regulatory parity. It said that telecom operators need a service license for offering voice and SMS services. And on the other hand, OTT communication service providers offer voice call, messaging, and video call services like the services provided by TSPs without any such license.
One of the things that is about lawful interception of messaging, there is an issue of proportionality. Are you going to surveil every single user because you want to catch one person? Another issue that pops up in the paper is around customer verification of individuals, saying that online messaging apps do not have verification of users. But the fact of the matter is that there is no benefit of customer verification that we've seen. There is a consistent attempt from the DoT and the TRAI to separate OTT communication services from all forms of communication services online. We need to remember that messaging is an integral part of multiple services. So to separate out messaging from every other internet service and put it under a licensing framework or a separate regulatory framework is extremely problematic.
Industry insiders are worried that the new set of issues raised in the latest consultation paper might rekindle debates on net neutrality. They believe a more nuanced approach is required towards security and licensing.
OTT players and the regulator should find a common ground, which will be in the interest of both. Moving on, benchmark indices have been shooting through the roof for a while now. In fact, markets saw positive movement in the entire first half of the calendar year 2023. But some sectors like oil and gas, metal and power underperformed the indices. So why did stocks in these segments lag behind? And will they regain momentum in the second half of 2023? Lovisha Darat explores in this report. The first half of calendar year 2023 saw positive momentum in markets. However, the rally was not broad-based as select sectors underperformed benchmark indices. In the first 6 months of 2023, the S&P BSE Realty, Auto and FMCG indices emerged as top sectoral leaders, gaining up to 20%. On the flip side, top sectoral losers were the S&P BSE Oil and Gas, Power and Metal indices, which declined up to 10%. In comparison, the S&P BSE Sensex and Nifty 50 surged up to 6.3% during the period. So what prompted these top 3 sectoral laggards to exhibit a subpar performance? Let us hear from Apurva Seth of Samco Securities.
The metal sector was primarily down because of slowdown worries in China. The oil and gas sector has also been one of the laggards, and the main reason behind that is the US recession and the increased supply of Russian oil, which has led to lower realizations for the oil exploration companies in India. So power sector had been going through a demand-supply mismatch, and discount losses were also there.
That said, downward trend in crude prices, cut in Chinese interest rates and pickup in power demand may trim negatives in oil and gas, power and metal sectors. Against this backdrop, will these sectors turn out to be dark horses of H2 CY23? In the first 10 days of H2 CY23, the S&P BSE Power, Oil and Gas and Metal indices have gained up to 4.3% as against nearly a percent rise in the S&P BSE Sensex and Nifty 50. Analysts too believe the trend may change marginally across these sectors in H2 CY23.
Oil and gas segment is likely to improve its performance in the second half. The main trigger for improvement will be the superior performance of oil marketing companies, assisted by higher marketing margin. Metal prices are soft and are likely to remain soft in 2023, perhaps even in early 2024. The Chinese slowdown leaves no room for a rally in metal prices and metal stocks. But the bad news is already in the price, so a recovery is possible on some surprise positive news. Energy segment continues to face constraints. The scope for a rally in the second half of 2023 is limited.
Overall, analysts expect metal, power and oil and gas sectors to show slight improvement in H2 CY23. They, however, remain cautious over volatile raw material prices and demand patterns. Today on June 12th, investors will watch out both India's CPI and IIP numbers, US CPI figures and Fed's Beige Book survey.
He's making plans for an early retirement. Business Standard.
After the markets, let us turn our gaze to a rather sensitive subject, the India-Pakistan relations. Last week, New Delhi decided to boycott proceedings started by Islamabad at the Permanent Court of Arbitration against 2 hydropower projects in Kashmir. India said that a neutral expert was already examining the issue and the Indus Water Treaty prohibits parallel proceedings. But what exactly is the Indus Water Treaty? Raghav Agarwal explains.
It is a treaty signed between India and Pakistan in 1960 that allocates the water of 6 rivers between 2 countries. It was signed by then Prime Minister Jawaharlal Nehru and Pakistan's then President Mohammad Ayub Khan after 9-year-long negotiations. According to the deal, eastern rivers, namely Ravi, Beas and Satluj, have been given to India for unrestricted use. On the other hand, western rivers, namely Indus, Jhelum and Chenab, have been given to Pakistan. India has also been given the right to generate hydroelectricity through the run-of river projects on the western rivers. However, Pakistan can raise objections to the design of Indian hydropower projects on these rivers. The current disagreement between India and Pakistan revolves around the design features of the Kishanganga and Ratle hydropower projects. Both of these are located in Kashmir. Kishanganga was inaugurated in 2018 and Ratle is still under construction. Both of these plants are located on the western rivers Jhelum and Chenab, given to Pakistan under the treaty. Pakistan has, however, raised objections over the design of these projects. Under the treaty, questions are to be handled by the Permanent Indus Commission. This commission facilitates cooperation and information exchange between the 2 countries and has a commissioner from each country. The treaty further says that the differences are to be resolved by a neutral expert. Finally, the disputes are referred to an ad hoc arbitral tribunal called the Court of Arbitration. In 2016, Pakistan asked the World Bank to facilitate the setting up of an ad hoc court of arbitration to look into the concerns about the designs of the 2 hydroelectric power projects. On the other hand, India asked for a neutral expert's appointment for the same purpose. These requests come after the Permanent Indus Commission engaged in discussions on the matter for a while. According to the World Bank, the treaty does not specify which method should take precedence, but it has initiated both the processes of assistance on Pakistan.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Indus Water Treaty has withstood 3 wars and years of strained ties between the 2 nations. Well, that's all we have for you today. For more news and analysis, please log on to business-standard.com. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.